I think so. And of course, as you know, China drives the index. It's 30% of the index. And when the index goes down, of course, a lot of the people who invest in these markets tend to get cold feet. But the reality is that what's China's loss is the gain of other emerging markets. So you're seeing a lot of the production that was in China moving to other emerging markets, and of course those markets do better. Probably the most exciting area right now is India. That's where we see lots of growth and lots of change taking place. But if you look at some of these other markets like Mexico, despite what Trump wants to do, the trade deficit of Mexico against the U.S. is growing. In other words, Mexico is exporting more to the U.S. And I believe that with the U.S. economy doing so well, it's going to be sucking in products from all over the world, particularly from emerging markets. Despite the fact that China may be losing out, other countries will do well.
Mark, what about Chinese growth? Do you think that gets significantly derailed as this trade war has escalated in the last few weeks and months, or will it kind of be able to weather the storm?
No, there's no question that China is going to be slowing down. But there are a number of reasons for that. Not only the trade war, not only the deteriorating confidence among people in China, the consumers in China, but also because the size of the economy is so big that in order to achieve the 10% growth they got in 2010 is almost impossible. So you're seeing a general slowdown, and I think that will continue going forward. But we must remember, China is huge. There's a lot going on there, and we don't want to miss that, regardless of what happens with the trade war.
I was sort of surprised to hear you say India, Mark, because the latest is actually that the Trump administration is removing its zero duty access for $6.3 billion worth of Indian goods. And a lot of people see that as a sign that the administration is going to pressure India next to get fair terms on trading. I mean, where in the world is safe?
Well, you know, the interesting thing about India is that it really is not dependent upon exports. What we're excited about in India is the domestic market. And by the way, that's true of China as well. We're not interested in exporters when you go to China. Same thing with India. We're interested in companies that are growing the domestic demand. And that demand is growing. There's no question about it. Per capita incomes are going up, both in India and in China. So that's where the excitement is.
Mark, quickly, but what about Mexico? If Friday's mooted tariffs do indeed get implemented on Mexico, are they going to suffer much more than it sounds like you think China is going to suffer?
It's a big problem with Mexico. If those tariffs are imposed, it's going to be a real problem. And by the way, a big problem for a lot of the U.S. companies. Just think about the automobile companies in America that depend on parts from Mexico. So that's going to be a game changer. I'm afraid the hope of being able to stem the flow of refugees and people going into the U.S. is pretty difficult. The Mexican government can't even handle their own internal drug problem, their own internal problems with criminals. You know, it's going to be a real problem. They will talk the talk, but I don't know whether they're going to be able to walk the walk.